What's going on, guys? Eddie Dowd back again with Brian Sachs. I'm a real estate agent. He's a mortgage lender, and we come to you every single week with more real estate tips. And today we wanted to come to you and talk about the different types of loans. I hear a lot of people talk and they say, "Oh, I need to get this loan," or someone tells me I need to get that loan, and somebody tells me I need to get that loan. And there's a lot of people out there that maybe have bought one house or sold one house that are partial to one type of loan. And that may be great. It may work out great for them, but it's not always the best advice to take to just go in with what somebody says. So there are different loan programs. So we want to talk about what they are, what the pros, what the cons, who they work better for, and what they work better for. And that way you can make an educated decision on what best fits you versus just taking the advice of somebody that's gotten one house in their life. Brian, you there?
I'm here, and I'll go even a little bit further. People have a couple concerns when they come to me. They want to know, um, will pulling credit hurt me? Will it make my score go down? And the truth is, when a mortgage lender pulls your credit, it really doesn't hurt your credit score. So don't worry about it. And if you're going to shop multiple lenders, it's still okay because as long as all of these lenders are checking your credit within a 30 to 45-day window, it's counted as one pull. But it's always kind of amusing to me. So if you tell your family, friends, and coworkers you're going to be looking for a home, they'll all tell you about the best loan officer, the best realtor, the best program. You should do this, you should do that. But the truth is, everybody's situation is the same. I'm going to give you an analogy. Because clients call me sometimes and go, they don't want to share anything, but they want to know what's best for them. Well, it's sort of like you coming into the hospital with a stomach ache and being rushed into surgery before a doctor's even seen you to see what the problem is, right? So you can't give a diagnosis or perform surgery till you've diagnosed what the issue is. And you can't diagnose the issue till you speak to a patient and find out what the problem is. It's the same here. What you and I try to do, Eddie, is a little different. Instead of just saying, okay, well, you qualify for $500,000, your payments this, blah, blah, blah. We try to, number one, get your information, find out what you're trying to accomplish, find out what your comfort levels are. Because just because I say you're qualified for a $500,000 loan doesn't mean you're comfortable with the payment, or maybe you're comfortable even higher and you want to go to 750 and we may need to get a co-borrower. Everybody's situation is unique. Go ahead, Eddie. You were going to say something.
No, no, I was agreeing with you. Everybody's situation is unique. Yep.
Yeah, so you really have to be comfortable with the realtor and the loan officer you're working with, and you need to share. And if that loan officer is just spitting out numbers and not asking you, what are you comfortable with? How much do you want to use? You may have $5 million in the bank, doesn't mean you need to use more than 10. It's or 10,000. So everybody's situation is different. And while your family, friends, and relatives and coworkers all mean well, the loan they got was right for them, may or may not be right for you. So let's answer the question. There's really four kinds of loans. There is a USDA loan, and a USDA loan, the benefit is no money down. The challenge is it's only for certain areas and actually goes house by house. Okay. We'd have to look up a house on the map to see if that area is eligible for USDA financing. And there are income limits that vary by county. So it limits what you can look at. But if you're in a very rural area and you want to put no money down, great product. VA. VA is for veterans or reservists that have 6 years in. The beauty of a VA loan is no money down, very flexible with credit challenges. You don't have to have very high credit scores. Um, and again, the downside is you have to be a veteran. So if you're not a veteran or a reservist, you're not doing a VA loan. And by the way, I have a lot of people that come to me. One's a veteran and the other is their future spouse. Well, VA is only eligible if you're married. You can use both people, and or you have two veterans. They do charge something called the funding fee, which could be 2 to 3% of the loan amount, and that's the insurance because you're putting no money down. And then we have FHA. FHA is the Federal Housing Administration. FHA allows you to put down 3.5%, much more flexible on the amount you would qualify for, and much more flexible in terms of if you have lower credit scores. The downside is they have an upfront mortgage insurance of 1.75% and a monthly mortgage insurance of 3.5%. And then we get to the plain vanilla loan, which is a conventional. Conventional, you can potentially put down as little as 3%. Your credit scores are very important. You will have something called mortgage insurance. Mortgage insurance, again, protects the lender in the event of a default. If you get 20% down, you can avoid that. And a great program, again. So you see, there's all these little twists and turns, right? FHA, VA, conventional USDA, they treat income sometimes a little bit differently. They look at overtime a little bit differently. They look at consistency of income a little bit differently, ratios, how much you qualify for. All of that is a little bit different. And then just to pile on a little bit, Eddie, we have grant programs. There's the state of Maryland, the Maryland Mortgage Program. There are city and county grants. There are federal grants like the Federal Home Loan Bank Program. All of them have their own little ins and outs of whether you qualify or you don't. So that's why I'm saying when you get wheeled into the emergency room, that you don't want to bypass the diagnosis and go right to surgery. We got to find out what the problem is and what the right treatment is. Maybe surgery is the right treatment. Maybe it's something that'll pass, or maybe there's a pill I can give you or a shot, make it get better. Same thing. We want to make sure not only that you're going to be able to get that loan, but we want to make sure that you're comfortable and that you understand how much you need and that Eddie is structuring the transaction correctly, which all depends on the financing. Maybe we want the seller to help us a little bit. Maybe we don't. There's all sorts of things that go into this, and that's why you need a good team. So I know that was a long-winded answer, Eddie.
No, it was a good answer. I mean, we went over everything, and even other things that we didn't have on the agenda, like the talking to a lender and getting the credit pool, because, like you said, you can't know what's the best for you until you know really where you're standing. And a lot of people don't know where they're standing, whether it's credit or some other things. So talking to a professional is going to be one of the most crucial thing to do, and then that way we can make a game plan for you. But you had we broke down each and every loan, the four different types of loans, and kind of how they differ, and then also we have programs that can help out as well. So the thing is, we just need to get you educated, and we need to get clarity on your personal situation, because your situation isn't my situation isn't Brian's situation. So everybody is a little bit different. So we need to, crack open the shell and see what's going on, with your finances and with your goals, and see what best fits you and what you may or may not be eligible for as well. So the best way to do that is reaching out to Brian. How do they reach you, Brian?
443-471-8557.
And you can reach me at 410-588-6536. And another thing that we mention every time, but didn't mention yet today, is the home funded. It works like a GoFundMe. You, your friends, your family can contribute money there, and we give you up to $2,000. So that's why you should give us a call versus giving Joe Schmo a call. But thank you guys for joining us. We'll be back next week.